This computer. What up, babes? And thank y'all for coming into our family session. I have to start off by saying, just to stamp it so it'll always be here, shout out to the parents who brought their kids in and who are getting just as excited as y'all's kids are. I did not say that on them, but that sound about right, so I think they believe it. And just building their excitement, my excitement, all of that. Y'all. Not we out here building community and building generational knowledge together as family, as one. And I love it. I love it real bad, real bad, real bad, real bad. But I also appreciate y'all's entire ministry on Monday because, or what was that, Tuesday? Monday, Tuesday? Monday. Yeah, because baby, I needed to go into the back case study, make y'all this, and come back, run it back to y'all. Um, and I'm going to start this off by saying I do not trust the news. Um, I do not trust the headlines. I do not trust the newspapers. I don't trust media because I've done my deep dive research on who owns all of that. And too many of y'all was endorsing the current administration financially, publicly, physically, all that, right? I don't really trust y'all that much. Now, I am trusting the news to be my GPS, or to be my destination. I'll say that more. The news is telling me where it is that I want to be. But once I get to once I type it into my GPS, you know what I'm saying? I'm just listening to the turn by turn directions from there. I'm not picking my phone up to look at the map. And just, the analogy I'm going for with is as far as once the news tells me what sector I want to be in or I need to be in, I should be in, all of that. I'm cool on the news. I'm not paying attention to what the headlines, what he says, what he's not saying, what they raising, what they not raising at all. It's the charts. It is absolutely the charts. And y'all know if I'm coming in and saying that I need y'all to focus on just the technicals right now. I don't know, you know what I'm saying? So we're just gonna dive into some market opportunities tonight. That's just gonna they just falling the opportunities just falling out the sky because yay, when we stop fighting, we start to rebuild. So we've been tracking the ceasefire updates in the Middle East, and now instead of just reacting to the headlines, I want us to shift into strategy mode. So that's what we're gonna go over tonight. I'm gonna show y'all where smart money goes when the war premium cools off. Okay, so we're gonna go beyond oil and weapons. We're gonna talk track tech and travel and it's all that good stuff. So what I need y'all to understand first is that war creates fear. Fear drives money into what we call the defensive sectors. So we've already talked about it. We think in oil, gold, those war stocks, Lockheed Martin, all that. But peace, listen, peace is gonna open up the floodgates for growth. Peace opens up the floodgates for growth. I need to write that down. That's a bar. Because that's when investors begin to rotate into more aggressive plays like technology and consumer spending, infrastructure, and different emerging markets. So I need for y'all to think like a portfolio manager for the next 3.5 years. All right. What does this ceasefire unlock? What does this war unlock for us? Because the pros, they've already shifted their money. Or they're shifting. We see it happening right now. And the money's, it's already moving. We're here to catch the signs. So we're gonna start off with the travel industry first, and I need y'all thinking basket first. So of course, jets. Y'all know I love me some jets, and it is so affordable, relatively, right? I know affordability is different for all households, but jets is an quote unquote affordable ticker to trade. And that sucker can move about 40 cents in your direction, and you're gonna be up 60, 70%. I like those odds. I'm cool with that. Okay. So, then, of course, we got Delta Airlines, United, American Airlines, Southwest, Carnival Cruise Lines, just all names that are familiar to us. But now we want to think about what's going to happen after this global conflict slows down. We're going to start seeing people book flights again. We're going to see tourism rebound. We're going to see these cargo routes resume. We're going to see the jet fuel prices drop. And that's how these companies start beating earnings expectations. Okay. I do not want y'all to blindly jump in. I want you to look at the metrics. Are the bookings rising? You can simply go to the investor relations site. They'll tell you. They will tell you. What's the load factor? We got a whole district out here, D4, that's just full of logistics guys. Well, and women, because we equal in here, right? Whoa, 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 whoa. You know, so it's time to take the trash out. But anyways, what's the load factor? How many routes they get in? What's their fuel cost guidance? Because this is where we're gonna find the discounted stocks that are ready to rebound, especially these airlines with the international exposure right now, y'all. And it's summertime, and we headed into the travel. The end of the year is travel, the travel quarters, right? And consumer spending is quarter three, quarter four, because quarter three we spending to get these cool kids back in school, and quarter four we spending to buy them gifts and vacations, right? The second half, I don't realize that. The second half of the year is for the kids to spend our money. The first half of the year is for us to recoup what the kids just made us spend. I have learned that the hard way. The hard way. So I need y'all looking these things up. Y'all, y'all know how I operate now. So if this is first in the shoot that I pulled up, I'm telling y'all, pay attention to the travel industry right now, particularly the airlines. I done got most of y'all into CCL calls. Write them suckers out. And if you don't feel comfortable with your leaps and whatnot, then equity, equity, babe. Because I'm not saying what I'm looking at right now, these are not like little bitty plays, right? The day trade opportunities are absolutely coming up from all of these. And I encourage you all to pull up the charts as you go back in your reviewing and you're switching your watch list out a little bit, creating a second one. All right, amen. Okay. I challenge y'all to go look at those charts and look at them like on the 15-minute and the 1 hour time frame. They've been moving in clear, very trendy tickers on the lower time frames with amazing, we about to break these range and give us long-term swing and leap opportunities as well. Okay. However, I'll just go ahead and tell y'all right now, I really put it in order, except CCL should have been behind Love. I really put these in order. Delta Airlines, they bookings are have been increased the most. I don't think I worded that sentence correctly. Y'all know what I'm trying to say? They've had the highest, there we go. Delta Airlines has the highest increase in bookings. And they're not really raising their prices like crazy. Now we look at Southwest Airlines and they just lost a lot of business. Charging me for bags, you know, please. It's the only reason we was here in the first place. We absolutely want to pay attention to them suckers right now, okay? Now, next up, semiconductors. Because if oil is the lifeblood of these old school, this old school war economics happening right now. Dare I say biblical? Chips are the power supply of the digital world. Oil is the lifeblood. These supply chip, these semiconductors, these microchips, they are the supply of the digital world. Okay. War disrupts supply chain and the ceasefire turns around and stabilizes them. So we're gonna see tickers like what's been that is Fitty on here? Fitty been making us that bag off of what? SMH, which is one of the semiconductors, one of the ETFs for semiconductors. SMH just been moving just a mind of its own. Consolidation, where? Not on that chart. All right. Nvidia, of course, AMD. Yay. Who was in the AMD swing with me? And I know D4, y'all were looking at Micron. Now let me know in the chat. But with the AMD, them chips is doing what they gotta do. AVGO, Broadcom. Whew. These are all going to benefit when as global shipping and manufacturing and these cross-border contracts start flowing again. And that was announced last night, right? That hey, we're gonna open up these borders now. Tariffs, this administration, no. No, no, no. We all friends. We don't want to tariff you this week, right? So we want to watch as we're approaching earnings season. I need y'all listening to the forward guidance. And in the semiconductor industry, hey, the company that says, or the company that beats earnings and it's because of AI and cloud growth, You go long. A company who admits that they had inventory issues and they tell you about their inventory corrections, you go long. And if they have any sort of news telling you that they were exporting from Taiwan and South Korea and they were able to figure out how to reroute and export somewhere else, you go long. Y'all want me to say that again? It's on the recording, but y'all want me to say that again? Let me know in the chat. This is going to be one of the safest, aggressive bets post-conflict. So earnings season is approaching, and I need y'all listening for three key things. First one is inventory corrections. If they tell you, especially if they admit, hey, we had some supply issues, well, we had inventory issues because of global supply chain issues, right? And they come and they say, not only did we have those problems, but now we're about to give you forward guidance on how we're going to correct our inventory problems. You go long. You go long. If the semiconductor company, and I'm just going to say Micron, if Micron beats earnings, and in their little spiel, in their little speech, they say that they beat earnings and it's due to their AI and cloud growth expansion. You go long. You go long. And if this the big one, if they put out that they was exporting a majority of their inventory they supply was being exported from Taiwan or South Korea, and they come out and say we are no longer exporting from Taiwan and South Korea, you baby, you go long on swings, leaps, and equity. You go long. You pause. You pause because it's going to drop a little bit if they miss earnings because there's a lack of growth in the AI and cloud growth or cloud infrastructure, all that. If they still have inventory issues, you wait a second, it's going to drop a little bit more. If they are still exporting from Korea and Taiwan, you wait a second. Them suckers are going to drop a little bit more and give you an opportunity to go long. All right, we tracking some fives in there. Now, renewable energy and utilities, this it for me. This it for me. Because give me the safety. Okay. We gotta talk about this clean energy. The sector that gets drowned out during war, but returns strong once the fear settles. Every time. Again, fact check me. Go look at 2001, 2008, 2016, and 2020. It really sounds like we need to mind our business a whole lot more, but there we go. Now, these ESG funds, which is the environmental, social, and government, no, not government, environmental, social, governance, those funds, they usually pull money back during war, but when oil cools down, when we see oil start to cool down, and then peace is the narrative again, that's what we're seeing in these headlines, all right? Rotate your money over into renewable energy and utilities if you don't already. Shout out to you, Sharonica. There you go, sister. Now, I have been steadily loading up and I've been talking to quite a few of my active babies, right? And I'm glad to see everybody else in here on ICLN. That's the clean energy ETF. When I tell y'all the expense ratio is basically Casper the Ghost, basically Casper the Ghost, ICLN. Get up in there. NEE, let's go, Miss Eva. It just amazes. I still remember our very first conversation we ever had in the Discord DMs. The very first time I was like, woof, hold on now. And now look at you. All right. Now, ENPH, we love that. SEDG, NEE, as you already got it, love that for you. What I need for y'all to do is track government incentives. And guess what? I'm not just going to throw y'all out there to the wolves. I have a PDF for y'all uploaded in the Mentee chat as soon as we get off. Don't even worry about it. Like these solar tax credits or the infrastructure bills. Jarvis also just amazing, beautiful human being. He broke down the big, beautiful bill. And then the crazy part is I saw the email, Miss Patrice, because which Miss Patrice, you need to go on and let everybody else get into your what's it called? Your subscription list. And she sent something out today talking about what makes this bill so beautiful. Let's talk about it. And it was some gems in there. I'll forward it to everybody and then I'll keep publicly bullying her to add y'all to her email subscriber list because it's lit. But like I said, I do have PDFs for y'all to go through there. And of course, I broke down the best companies that would be affected off of the bills or the government incentives. So don't even worry about it. Indian giver. So then I need y'all to watch capacity expansion news, okay? And follow the global solar adoption rate. Again, y'all already know I got all of that for you. But these are going to be our long haul plays. This is the stuff that I'm going to want y'all to get in once they do these pullbacks, and we're watching this sector pull back right now. Just a little pullback. It's holding. It's doing what it got to do. We're watching it pull back right now. You're going to want to hold this. This is something that's going to get you through this administration. These will get you through this administration. And I'm all in on EMPH. Well, let me not say I'm all in. I'm in on EMPH. They getting them incentives. They're getting that government incentives. I think it's like close to 50 million, something like that. If not billion, I feel like billion sounds a little bit more. But yeah, these go on sale after conflict. So that's right now is our entry window for these. And again, these are the ones that we want to hold on to through this administration because, okay. Well, hold on, let me pause this. So then we go, because y'all won't finna tell nobody. No proof I ever said that. No proof I ever said that. But let's now get into the industrials and construction because war destroys, peace builds. That's the whole thesis behind investing in industrials post ceasefire. Did that work for y'all? Y'all let me go in my back cave. The whole thing, I got y'all. And of course, in y'all's individual classes, we can pull up the charts and et cetera, all that good stuff, right? But think about the companies that make the literal machines, the parts, and the power that's needed to rebuild. Caterpillar, John Deere, General Electronics, I always forget what ETN, but ETN, right? So we want to look for infrastructure in that big, beautiful bill. We want to look for what they're going to do with infrastructure, earnings tied to capital expenditures, right? Global construction projects. What's the first global construction project that you can think of? Well, I'll even say, what's the first domestic construction project you can think
Are
of?
you capitalizing? Okay, you capitalizing
That-
on good. And I'm sorry for
I got you. All right, so what's the first domestic construction project that Trump once built here in the US? That wall, suckers, that wall, that wall, that wall, that wall. Now, here's where he messed up and what was kind of funny to me. It made me not, it's not a mess up because he's a chess master at the end of the day, right? More whatever. How the hell do you want to build like a 20-mile long wall and you need all of these supplies that you just put 100% plus tariffs on? Now make that make sense. Now make that one make sense. So I was wondering with that. Because it's like we sure ain't been hearing about the wall. Oh, because we can't afford it. You taxed everybody. But even, okay, moving on, okay? Now, these particular companies tend to lag the market like right after a war. So we're going to see these pull back for longer. These will absolutely pull back longer, but they rip when funding gets approved. And this is what we're seeing happening right now. This is what the Miss Patrice, help me out. What was that? Something just passed. Oh, yeah, they deporting again, right? It was like, oh, wait a minute, wait a minute, wait a minute. We've been talking about the Middle East too long. Next thing we know, we seeing headlines talking about they went on and approved for deportation again. Oh, okay. That's crazy. All right. Patience plus timing equals profits over here in this sector. And I'm watching XLI. XLI, 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 XLI. Okay. I saw that headline too, right? Like, yeah, all right, sir. Now let's shift to the global picture because emerging markets, these are gonna get hurt when war breaks out because investors retreat. We get scared. We retreating and we're going to safer economies. But once the fear eases, as we're seeing it happen now, we're seeing it play out right now. Day by day, day to day, we're seeing it play out. The fear, with it easing, is flowing back into the riskier high growth countries. So we want to look at ETFs like VWO, which is the Vanguard World. Ooh, that one right. I'm sorry, the Vanguard Emerging Markets ETF. Beautiful expense ratio. Beautiful expense ratio, you guys. VWO is $50. And as far as the dividends, it's paying 13 cents or 14 cents per share. VWO. Y'all want to pull that up? Because I know if I get off this screen, I'm gonna get distracted on the chart. So y'all go to the monthly on VWO. Just go straight to the monthly. And if you see something that caught your attention on the monthly, put a 5 in the chat. And then also tell me on the monthly, is it getting ready to do a break of structure or a market structure shift? Break of structure, period. That's a boss move because it never broke the lows, not on the monthly. Do I got some 5s then? Y'all see that? Purr. You see that, Sharonka? You see that, Miss D? For sure, you, Ashley. You see that? Let me see. Let me look at my list. Where's Onan? Onan, I need you up over there. And Miss Tisha, I need you up in there too. All right. Cool. That one is going to be beautiful. It is absolutely affordable. I'm gonna go ahead and tell y'all now on the tickers that we're talking about in here. I'm not looking at nothing that's before September. I'm not looking at nothing that's before September. Now, VWO is projected to push up to 55. If you go December 19th, 55 call is going to cost you about 65 cents if you was to go all the way out that way. Now, if you did the 50 call, you bought right at the money, right? It's going to cost you about $180 a contract. Ride that sucker out. Now, if you sitting there thinking $180 a contract and I'm not going to sell it to the end of the year, I don't know about that. Then you better buy some equity. It's $50, which I'm not counting pockets because I believe in fractional shares. So I say it like that. I'm not trying to count pockets or say, like, it's $50. You better put that in there, right? Like, because $50 is $50 right now. That's like a half a tank of gas at this point. But I know that you could put $5 in there this day, $10 the next day, and get yourself on up to a full share. We tracking VWO. I need y'all in VWO. Amen. Now the other one is gonna be EWZ, which is the Brazil ETF. It's a Brazil ETF. Their holdings, their holdings are lit. Now, can anyone tell me why I'm interested in Brazil right now? World Cup. Mm, I'm cool with that. I'm not mad at that. What else? Oil. There we go. Because what we here talking about? We're here talking about post ceasefire, pre ceasefire, in the middle of ceasefire, all of that. Brazil is a commodity superpower. They are one of the largest global exporters of crude oil, iron, soybeans, and gold. Yay! Get y'all asses in EWZ. Please. I don't like the option chain, not gonna hold you. That option chain is disgusting. The spreads are wide. I've never traded it. I have traded VWO since last week, right? And it's doing well. But please get y'all booties in EWZ. EWZ. They are the largest, well, not the, but one of the largest global exporters. I think they top three and they not number three. I know that. They're either the first or second. I should have wrote it in my notes. My bad. Love it for the equity. The expense ratio is a little disgusting. I'm not gonna hold you. I won't even hold you. The expense ratio makes no sense to me. Like, huh? It's gonna cost me more in the expense ratio higher than goddamn SPY even. But I'm here for it, okay? Because when these geopolitical tensions drop, global demand for those raw materials, it stabilizes, it increases even like especially from countries like China. So there we go with FXI. Now, less Middle East instability equals a smoother global shipping lanes, which is why we all getting scared about the Strait of Hormuz. I'm scared to say them names now. What is y'all? Y'all not gonna eat me up. The Strait of Hormuz, whatever, right? That's why everybody kind of nervous about that. Like, y'all finna shut that down? Y'all finna block that? Right? We want smoother global shipping lanes, and that's going to be more demand, or that equals more demand for Brazil's resources. So if iron ore demand rises due to like global rebuilding, so just kind of think like post-war infrastructure projects, things like that, right? And again, we're going global. No, we haven't had any issues, but like bombings here since Black Wall Street, but we're talking different story, different day. Okay. We also want to look at companies like Vale, which is a Brazilian mining giant. Brazilian mining giant. Giant. Have y'all seen that ticker? Vale, VALE. It's like a $9 stock. It's been kind of moving a lot. We've been seeing it a lot of like a pre-market mover and all of that. It's doing what it's doing. Now, we also got to look at the interest rates when it comes to EWZ because Brazil's central bank has been ahead of the curve with fighting inflation, and they were the first to start cutting interest rates while most of us, like the US, we still tightening or pausing them or just, not doing nothing. So their lower rates stimulate their local business growth and, it just attracts foreign capital, which we're not getting. They know people ain't wanting to buy in us. Foreign countries not wanting to buy our stuff right now. We can't get it together. So just all of these things, it just makes Brazil attractive to global funds, reallocating out of the US bonds and into like these high upside, lower risk plays. All right. The emerging markets, these are lower risk plays right now. Now, I'm looking at my notes. I could really keep going. The China-Brazil relationship. Brazil is very much so tied to China through agricultural exports, and energy. We already talked about that, the iron. So if a ceasefire in the Middle East cools the global trade tension, China increases its appetite for Brazilian imports. Because they're not messing with the US imports right now, let's be real, right? So that'll help them rebuild infrastructure and just keep their stimulus programs flowing. So a strong Brazil equals a strong China, and a strong China equals a strong Brazil. So FXI, EWZ, VWO, those are just very safe for us to be in, okay? And we're diversifying with low correlation, et cetera, et cetera, et cetera. I could go on and on and on and on and on. But how are we feeling about that? I'm gonna pause before I keep going onto the consumer discretionary. How are we feeling about investing in emerging markets? We want to do some research, or we thinking maybe is there another sector that we've covered that you'd rather do that? What are we thinking? Now I do have to say this, Keaton. I told you when we was talking yesterday, Shawty, I'm already working on the international. But I just need you to just learn how to research the company with me. I got you from there. Gonna look into it for sure. Okay, good. All right, so now let's talk about consumer discretionary. As long as I know I got y'all's attention at looking at some different things here, some safer things for us right now, I'm here for it. So this is for the people who love lifestyle stocks, Amazon, Starbucks, Nike, Home Depot, Lowe's, all that stuff, right? Because these are the companies that people spend on when they feel safe and secure. I is. So consumer discretionary is hella emotional, very emotional. When consumer sentiment goes down, consumer discretionary sector goes down with it. When consumer sentiment is high, the consumer discretionary sector is goes up with it. Now, the difference between consumer staples and consumer discretionary is in the name. Staples are things that we need. We need Walmart, regardless, because we need groceries. We need Colgate because we don't want to be funky. We feel like we need Amazon, but do I actually need Amazon Prime? No, I can get my butt up and go to Walmart. But I like Amazon. I like the what's it called? It started with a C. The not comfort. The ease of it, I guess, whatever the word is. Yeah, we like that. I don't actually need it.
Convenience.
Convenient. Thank you so much. Appreciate y'all. I love y'all to death. Right? So discretionary sector is things that we feel that we need. And so we're gonna go spend money on it, but it's at our discretion. It's at our household's discretion. My household needs Starbucks. That's my discretion. Because if I don't have coffee, and that's just a small little thing that I like, I don't want to make my coffee at the house. I like going to Starbucks. I feel like a celebrity when I pull up in there. And if I don't have my Starbucks for today, am I a nice person? No. My Twitter fingers get to going. I'm real sarcastic without my coffee, you know? I need that Trinity. Maybe you don't need that. Maybe, we look at prestigious. I don't feel like I need Home Depot in my portfolio or in my household. Home Depot and Lowe's is not important to me. But when I look at prestigious, Home Depot and Lowe's are very important at in his household because y'all know he out here just building a freaking farm or what. The man told me he was gonna send me some fresh vegetables. I said, okay. Okay, sir. My bad, I ain't mean to cut for you. I'm just saying, okay? So when fear dies down, people go from saving to spending. Retail surges, e-commerce pops off, and again, we're headed into quarter three, or we're in quarter three and quarter four. We spend quite a bit. And travel demand boosts hospitality names as well. So what I want y'all to do is use Google Trends to see if people are searching for vacations, sneakers, or patios again. See what they're searching for. Oh my goodness, you're gonna know what company you should put your money in the consumer discretionary sector. Google Trends. And all y'all gotta do is go to Google and type in Google Trends and it'll pop right on up. And you just ask, well, and honestly, a list will pop up and it's gonna show you what are people spending their money on right now. What is the average person spending their money on right now? You can also just go to trends.google.com, I believe. Has anybody ever used that, Google Trends, before? I think it's a great thing to use if you're a swing trader and you're wondering what's about to move. Go look at what are people searching for, because whatever we search for is what we looking to buy, right? And whatever we buy, the price goes up. Woo, woo, woo. So Google Trends. I need y'all on that. And then earnings season is approaching. If you are interested in this consumer discretionary, whatever sector that we're covering tonight that you're interested in, babes, y'all gotta be listening to the earnings. You have to. And if if it's something where it's like, oh, I'm just, it can't keep my attention, okay, you paid me to do that, whether you active or not. Because shoot, I'm an investor. So I took what y'all invested in me and I put it in the market. So I'm forever getting paid from y'all. That's honestly, side note. Somebody asked me today, like, why do I still keep, like everybody in my thing? And I'm like, well, shit, I'm still getting paid from y'all. I knew what to do with my payments, with my revenue. I put it in the market. So, y'all gonna be paying me for the rest of my life. That's how I see it personally. But with that being said, going back to it, right? Um, my whole point in bringing that up is to say, like, okay, utilize me. Like, utilize me. I'm tired, y'all. Aren't y'all tired of coming back and being like, well, yeah, I should have took that trade and I thought about calling you, but I didn't want to bother you. I'm tired of hearing that. Y'all tired of saying it? Because literally, just utilize me. That's, just, hey, shoot me a quick text saying, I know you're nerdy and you like to listen to these calls and you like to ask questions and be petty on these calls. So can you listen to the Amazon earnings call for me? Because I want to see, are they raising guidance or lowering it? Bet I got you. I'll send you a text after I listen to it. I'll let you know. Y'all catch that shade? Y'all catch that? I just need to make sure y'all caught that. All right. Period. Because if I didn't want you around me, I would have done what? Removed you from my personal chats. Got it. Got it. Got it. So, oh my God, now I have homework for y'all. Yeah. I want you to pick two sectors that you believe will outperform in the next 3 months. Not just a guess, you need to back it up. So you got to give me, when you come to me and you say the two sectors you with, you got to say, I'm going with consumer discretionary because of this recent current event or this recent headline. And then you're going to go one stock or ETF that's worth watching or entering. So you can DM it to me or bring it to me next session. We're going to be meeting next Wednesday, same time as well, right? Because this is what portfolio managers do every day. I don't want y'all just reading the news. Not anymore. Not right now. I want y'all to position yourselves based off what's coming next. And, yeah. Y'all, we should have known it was going to be homework. Ain't we on summer break? No. Mm-mm. Because if y'all go on summer break, then y'all going to try to cancel y'all subscription and then then I have to work. Like, what? So, no. Yes, you have homework. And then this will just, so I can keep y'all accountable. You can text it to me, you can email it to me, you can put it in the mentee chat so that we can do what? One band, one sound, all work together. Because you know what? Y'all all ask me the same question every day. What should I trade? Can we all just talk about it together? Can we all, we love an educated baddie. That's me. All right. I'm gonna go ahead and stop the recording and then see if y'all have any questions for me. Oops.